Hey tech enthusiasts, buckle up because today we're diving into the buzz about Manhattan Associates as they prepare to report their third quarter 2024 earnings. So here's the scoop. Manhattan Associates, ticker symbol MANH for those trading geeks out there, is on all our radars right now because they'll be reporting their earnings on October 22nd. Analysts have their fingers crossed for earnings of $1.06 per share, with revenue estimates floating somewhere between a cozy $261 million and $265 million. Comparing this to last year, it looks like they're shooting for about a 10.45% increase in revenue. Yay for growth. Over the past few quarters, Manhattan Associates has done some nifty footwork, consistently beating the Zacks consensus estimates with an average surprise of a whopping 26.61%. When it comes to surprises, they're like Steve Jobs revealing the first iPhone, nailing it every time. Let's hope they keep their winning streak going. What's been fueling this vibrant growth, you ask? Manhattan Associates is riding high on a spiraling wave of demand for their mission-critical cloud solutions, specifically among retail, manufacturing, and wholesale sectors. These three amigos drive more than 80% of Manna's bookings, so they're kind of a big deal. Add to that some spiffy new solutions in their toolkit. Manhattan Assist and Manhattan Active Maven, powered by the ever-so-buzzy generative AI, could easily be the espresso shot that Manhattan's top-line growth craves. These solutions automate customer service tasks and help with investment decision-making, making life easier across different verticals. Let's just say they're making some serious cloud moves. Furthermore, Manhattan Associates' strong service organization and growing partnerships are giving them an edge. Who doesn't want good friends in business, right? On top of that, new products like the Fulfillment Experience, Insight Dashboard, and Manhattan Yard Management are untilting the scales to boost their top-line growth. However, before we uncork the celebratory Martinellis, let's talk about the not-so-fun parts. There's some uncertainty swirling around project timelines and numerous deal ditherings. Unpredictable macroeconomic conditions aren't helping either, the financial equivalent of spilling your coffee just as you're walking into a meeting. Analysts assess these earnings using a nifty tool from the Zacks model, which bets on a combination of a positive earnings ESP and a solid Zacks Rank to maximize earnings beats. However, Manhattan Associates landed themselves a Zacks Rank number 3 with an earnings ESP of 0.00%. No points for guessing. They didn't make the cut for a predicted earnings beat this time around. But hey, it's not over until the official numbers are in. Techies, keep your eyes peeled for the official earnings release because how Manhattan Associates performs will stretch beyond the numbers. It might just tip the balance on how cloud solutions and AI continue transforming major industries. Thanks for watching to the end. Remember, this is just one story from our full daily show, which includes all the other news and an analysis of the day's tech market activity. If you found this video interesting or insightful, then please like, subscribe, and share it with others. Your support is greatly appreciated. Catch you later.